Hello, everyone, and welcome to a new session with Rights and Responsibilities Awareness Initiative. Today, we are lucky to have both Megan Deslippe and Bonnie Heuving to talk to us about a very important topic, which is renting versus owning. Should I buy the home or should I keep paying my rent? Well, if I keep paying my rent, I'm losing those money. Well, if I buy the home, maybe, that interesting, I might not be able to get a good deal. I'm not sure if I would be able to cover those expenditures. What could be important element to take into consideration before making this important decision? To answer all of those questions, thank you, ladies, who joined us today, and thank you so much for presenting this for our audience.
Thank you very much, Heatham, for having us today. My name is Megan Deslippe, and I'm an investment specialist with Libro Credit Union.
I'm Bonnie Heuving, and I'm a personal banking specialist at Libro Credit Union.
We're here as part of a program called Each One Teach One, which is run by financial institutions to go out in the community and educate people about financial literacy. So thank you very much for having us today. The goal of this presentation isn't to sell you anything about Libro, but it's more just an education perspective. To start the conversation on renting versus owning, Bonnie and I are going to do a little skit playing the part of a customer, and Bonnie's going to be in her personal banking specialist role, talking about the differences between owning and renting.
Hi, Megan. How are you doing today?
Hi, Bonnie. I'm good. How are you?
I'm great. What brings you in today?
Well, my friend just bought a house, and now I decided that I want to buy a home. I feel like I'm throwing away money by renting.
Definitely one of the advantages of owning a home is building equity as you're paying down your mortgage. Let's see if home ownership is a good fit for you at this point. Tell me about your current living situation.
Well, I live alone and I rent. I've been living in my place for just over a year.
Excellent. What do you like best about your situation?
I like my independence to come and go as I please.
Sounds lovely. Do you spend a lot of time taking care of your home?
I have the usual chores, laundry, cooking, but I don't have to do snow shoveling or cut the grass, which I'm really happy about.
Nice. Homeowners do have that added responsibility of caring for the yard. Is that something you would be comfortable with?
I'm not an outdoorsy person and I work a lot of hours, so I could cut the grass, but I really don't want to shovel snow.
That makes sense. Are you planning on staying in your community long term?
I guess it depends on what you mean by long term. I have career aspirations that would involve moving, but I could see myself staying here for at least a couple years.
Yeah, so when an opportunity arises for you at work, would you need to relocate quickly?
Definitely.
That sounds very exciting, and that might be more in line with renting. You may benefit from the more simplified moving process.
Oh, so then I'd be able to take an opportunity further away, and the move is less of a concern if I'm renting versus owning.
Exactly. Tell me what happens if something in your current home needs repairs, like say your toilet is leaking or the front door is stuck.
Well, right now I call my landlord for everything. They're really easy to get a hold of.
That's fabulous. And that's also another advantage of renting. Some people enjoy doing repairs themselves. Would you be able to handle some home repairs?
Well, when I call my landlord, the only thing that they do is call another handy person to come fix it, and I could definitely handle that.
Excellent. So that may not be an advantage or disadvantage of renting versus owning as long as you budget for those unexpected costs as a homeowner. Currently, those costs are covered by your landlord. What else do you know about home ownership?
Well, my friend that just bought a house just did a kitchen renovation, and it's beautiful. I'd love to have a kitchen like that in my home.
That's wonderful. The ability of making the space your own is definitely an advantage of home ownership. Have you thought about the additional costs of renovations?
I'm really not sure how any of that works.
There are additional fees beyond a mortgage payment, such as closing costs, insurance, property taxes, as well as repairs and general upkeep. And renovations would be in addition to this budget planning.
So I have to be prepared in my budget for more than just a mortgage payment?
Yes, there's a lot to consider for this major purchase. It's not always best to buy over rent.
Oh, my parents always told me when I started my career that I should buy a house.
That is a fabulous goal and not always the best option for everyone. Renting can be better than buying based on individual circumstances. There is a lot to consider. For example, when you say you might relocate for your career, you don't want to use your time doing chores around the house, and repairs are not something you enjoy, then it's okay to decide that renting suits your lifestyle best at this point in time, and home ownership is something you would like in the future. Would you agree?
That sounds great. I never realized there was so much work involved with being a homeowner beyond a mortgage payment.
It's nothing you can't handle. For now, we can take a look at your budget and start making a plan for a down payment and get you prepared for all the things involved with buying and owning a home. How does that sound?
Excellent. Let's get started. Awesome. So that gave you some insights into conversations that are important to have when you're deciding between renting versus owning. What questions do you have, Heatham?
Thank you, Megan and Bonnie, for this. So, for example, I have a question when it could be considered renting as a smart move.
Yeah, so Megan has some slides to show us. Um, so for renting, it keeps life a little simpler. It's flexible to move on short notice. Maintenance and repairs and other issues are not your problem or your expense. And overall housing costs can be lower on a monthly basis. When you're owning, you have a place that is your own. You build equity. Mortgage payments are like a forced savings plan. When you're owning, monthly house expenses can increase. You may need to sell the house if you want to move. Property values can depreciate, and sometimes you feel added stress of the financial aspect when you're owning. Renting, you can't renovate to make the place your own. Um, you may be forced to move if the owner wants to sell. You are not building equity with rent payments. Okay. So if you're thinking about buying a home, you should ask yourself the following questions. Are you planning on staying in your community long term? Is your income likely to increase? Are you able to handle the responsibilities of a mortgage? And are you able to handle some home repairs? If you can't honestly answer yes to all of those previous questions, then you may not be ready for home ownership. So renting is okay to choose if you don't have a down payment, if you have some credit card debt that you need to get under control first, if you're planning on moving within the next 5 years, maybe, and cost of renting may be a better deal than buying overall. And you just may not want to own your own home.
Excellent. Thanks, Bonnie. Heatham, what other questions do you have?
Yeah, you've mentioned budget to buy the house and to make a plan for the down payment. So, how do I budget to buy my house?
Great question. I recommend meeting with someone at a financial institution to help you with budgeting and seeing how much you can save on a regular basis to buy a house. Keeping track of your monthly expenses and your income, and hopefully there's some left over to set aside in savings. There's also a new option that started a couple of years ago, which is called a first home savings account that's designed for first time home buyers to save for their down payment. How it works is you get a tax deduction when you contribute to this account. And then when you take the money out to buy your first home within 15 years, it all comes out tax-free, including the growth that you've earned. It's an excellent option for helping you save for your down payment. So I would recommend reaching out to a financial institution to talk about the first home savings account.
When we are talking about the down payment, how much that could be approximately? Is there any certain percentage, for example?
Great question. The minimum percentage required is 5%. And then, Bonnie, would you like to talk more about the 20% criteria?
So if you have 20% down, then you don't need to purchase the extra home insurance. So a lot of times there's two different rate prices for mortgage. There is the high ratio mortgage, which is what you see plastered all over. It's a really great rate, but you also have to pay for that insurance if you have 5 to 19% down payment. Once you have 20% down payment, you do pay a bit of a higher interest, but you save on that extra insurance coverage. You may have heard of CMHC or SAGEN, and those are the coverages that you have to get if you have less than 20% on your mortgage.
So much. So, would my credit score affect my ability to obtain the mortgage?
Yes, your credit score is very important when you are looking at a mortgage. So, with a good credit score, you qualify for lower interest rates. So some things to keep an eye on for your credit score is high utilization of your credit. So if you have $1,000 available on your credit card, you want to keep that at least below half, maybe even only $300 over when you have 1,000 available to keep your credit score very good or excellent. Also, don't miss any payments and make sure that you're paying on time every time. Another thing I like to point out to people is that you have to pay your bill. Sometimes people think that they shouldn't have to pay a bill because they weren't happy with a service or they didn't get the service that they wanted. Once those items go into collection, it really affects your credit score. So it's best to pay the bill and then work to get your money back. Does
And
that make sense?
100%. And when you say a good credit score, so we're talking about how much?
So every institution uses a different metric to measure your credit score. So as long as you're doing all of the things, not maxing out your credit cards, paying your bills on time, and not applying for every credit card that's offered to you, those things will help keep your credit in line, and it's not something that you should have to worry about.
I mean, is there any certain um, test or evaluation to consider this credit score good or bad? Is there a certain figure that need to be reached, for example?
So we generally shy away from talking about specific scores because the number that I can pull would be completely different than a number from another financial institution, even though it measures the exact same thing. So just make sure you're making your payments and not maxing out your credit cards, and you'll be fine.
Make a lot of sense. So from this conversation, I can understand that there is also owning a house is not only would set an obligation on you just to pay the mortgage. There is a lot of additional costs. So you've mentioned cutting the grass, shoveling the snow, uh, handling the finances related to maintenance and other stuff, tax property. So how can I set a good plan to make sure that I would be able to cover all of those expenses?
So it's really important to have a budget in place, I'd say, before you buy a home, finding out what the property taxes are going to be, getting estimates for utility expenses, and then making sure you have some money that you can set aside for emergency savings every month. That if one day you wake up and your furnace is completely broken and it's the middle of January, Those can be, I know, like $5,000 to get a new furnace. So having some savings and being ready for those unexpected expenses is really important.
There's also ways to manage that. Like if you don't have a huge savings account, we can still work with you on a plan on how to manage those budgets going forward.
So if I am a freelance worker, I don't have a sustainable salary, would that be different consideration when I am applying to have a mortgage?
So every circumstance is different when you're applying for a mortgage. There's no cookie cutter way to do this. So we take a look at your employment history, your income history, and balance out and try to fit you with a good mortgage that's going to be comfortable for you going forward.
So I have another question. When we are hearing that, well, oh, the interest rate are increased or decreased, what does that mean, and how this will gonna affect my mortgage? And is there any way that I can just be safe from all of those up and downs changes?
So there's different options available when you get your mortgage on the length of mortgage, a variable or a fixed rate. So the term of your mortgage with a fixed rate, your interest rate won't change over that term. If you have a variable rate, your interest rate fluctuates with the Bank of Canada rate. So if you're worried about your interest rate staying the same, you pick a fixed rate that you're comfortable with for the period of time that you're comfortable with, and you can budget on that not changing for that period of time. Does that make sense?
Yes, indeed. And actually, that would conclude my questions. So thank you, ladies.
Thank you very much for having us.
Thank you.
Of course. And for everyone, thank you so much for being with us today. And as always, stay well, stay safe, and we are looking forward to see you